The SEC has finally dropped the sledgehammer on us. So for those of you who are not following, this is the TLDR. Too long didn't read. The PCAOB released a statement just last night stating that they have secured complete access to inspect 8 Chinese and Hong Kong companies that were audited by both KPMG China and PwC Hong Kong. That said, the devils are in the details. And if you want more nuance, continue watching the video. So for those of you who don't know, yes, the Big Four accounting firm do operate in China too. And yes, Alibaba was audited by PwC Hong Kong. And they were selected as one of the key engagement this time around to prove that, hey, not every Chinese company out there cook their numbers. Surprise, surprise. So funny thing though, investors were probably expecting the share price to go to the moon once this delisting overhang got lifted from the basket of equities. But in reality, Alibaba was actually down 5.17% after the news was released. Many were disappointed, just like I currently am, because you didn't help like that smash button. So don't be a disappointment like Alibaba. So by the way, I know many of you savvy investors out there are currently following the market extremely closely and are trying to hedge the volatility of your portfolio whenever possible. So currently, Moomoo is running an options campaign with an exclusive promotion from now until the end of January 2023. For new users, you can sign up with the link below to get commission-free options trading valid for 30 days and even reduced margin requirements of up to 100% reduction for trading specific option strategies. Sounds good, right? So this commission-free options trading is on top of the existing new sign-up bonuses that you will get, where new users can get up to 1 free Apple stock and a $20 cashback if you deposit a minimum of $2,700 with terms and conditions that requires to be fulfilled. So for those of you who have yet to sign up for a Moomoo account, I don't know what you are waiting for. So the instructions for receiving the sign-up bonus will be on the landing page itself. For my US and Australian viewers, don't worry, I didn't forget about you. Moomoo is also running aggressive reward campaigns, giving out free stocks and shares as well. Just make sure to click on the correct link below. So thank you Moomoo for sponsoring this video. Now, if I were to just pull out the 5-minute chart of Alibaba that was trading yesterday, you can see an obvious swing in price action intraday. So when the statement from the SEC was released, investors essentially bid the price up from $90 to around $94, and it quickly turned sour as the excitement fades away by the minute. So I'm no technical expert here, but let's try to dig deeper into the statements released by both the SEC and also the PCAOB to validate how good a news this is. So the official statement released by the SEC chairman, Gary Gensler, was a much more muted one. So he hedged his position by saying that this was actually a step in the right direction, as this was the first ever time Chinese authorities actually allowed access for inspection and investigations in the different Chinese books. But a lot of work remains to protect investors and ensuring ongoing compliance. So to not bore you with many of the minute details, this is just an extremely high-level view of what was agreed upon between the Chinese authorities and the PCAOB in the Statement of Protocol. Basically, the Statement of Protocol is just an agreement on how they wish to conduct their audit. So there were 4 key pillars. 1. The PCAOB staff was able to select any issuer audit for inspection or investigation. 2. They were able to interview or take testimony from all related personnel of the audit firm. 3. They were able to see complete audit work papers without any redactions. 4. They can transfer information to the SEC without any recourse. Long story short, it seems like the Chinese side has largely complied and we are tentatively in safe zone for now. So what exactly is the problem? Why is Alibaba or Chinese stocks not going to the moon? So calm down my friend, I'm getting to that. So despite this relatively quote-unquote good news, I think there are still 3 key issues that has yet to be dissolved. Firstly, if we were to really scrutinize the statements put forth by the PCAOB, it's true that based on first impressions, things seems to be heading towards the right direction. But like every first date, It always looks good at the start because everybody is bringing their best self out. Not every girl you meet will become your wife. Okay, that's maybe a bad example. But anyway, the PCAOB did set a qualifier saying that there is an ongoing need for accountability from the Chinese side of things. And should they obstruct or deny to cooperate in any way, any shape, any form, at any point, they will immediately reconsider their decision based on the HEFCA principles. So long story short, they are just saying that the ball is still in their court and you better not try to do anything funny or pull something off because we can still screw with you. And this statement we just released don't immediately give you the stamp of approval. So on top of that, they have also identified numerous potential deficiencies which are consistent with the type and number of findings that they have encountered in other first-time inspections around the world. So it's not really a China-specific problem, but more so a difference in accounting standards. Probably not anything major, but there are still issues that needs to be solved. So the worst might not be over yet. So this means that there is still a level of uncertainty around this delisting concern. And this would be delayed out into 2023 as they need more time to draft their final inspection reports. Secondly, just last night, the US added another 36 Chinese companies to their export blacklist, restricting China's ability to leverage technology based on military modernization and human rights abuses concerns. Doesn't sound like it's the first time, right? So this is on top of the recent chip export ban instituted by the United States and also forbidding US citizens, residents, and even green card holders from working in Chinese chip firms. So the US-China relationship is just like a gift that never stops giving, especially this is Christmas season. So as long as somebody keeps stirring that pot of gold, this US-China tension will remain as a recurring talking point until investors slowly forget about it. Thirdly, the general market sentiments after the inflation read and the FOMC meeting remains relatively bearish, and we are operating in a broader bear market. So, it's probably inevitable that these Chinese stocks were being dragged alongside. That said, I still hold my initial opinion that the worst is kind of over for Chinese tech stocks, as I've called for the bottom last month, not barring any black swan events, of course. So, some of you might ask me, Chigeng, what is the bottom line? 1. I'm relatively bullish of the SEC and PCAOB statement that were released just last night. So although the language that they employed were pretty hatched in the way, because they probably do not want to commit to anything verbally, but the general undertone when you really read through the report is still relatively positive. So I think we would probably get more updates on this soon. 2. The day-to-day fluctuations around these stocks are too hard to monitor and simply too hard to understand. So I think many of you should just focus on the business and not really on all this macro news. That being said, I know that many of these macro concerns weigh heavily on many of these Chinese stocks. So I will still provide you guys with a timely update, but all else said, I think we shouldn't put too much emphasis on this particular event or any subsequent events. Because if you were to honestly think that Alibaba and friends are going to be delisted in the first place, why do you even have a position now? 3. As this delisting concern slowly fades away, I think many funds might start to rotate back into Chinese tech again, due to their mandate and boundaries that force them to sell in the first place. And at least this known unknown can be squared away. 4. There will be a great deal of uncertainty ahead of Chinese stocks. Delisting is just one of the concerns. You have the government, regulations, property crisis, the economic slowdown, liquidity crunch, etc. etc. There will always be a next problem. But just don't forget that the stock market usually climbs on a wall of worry. And if you are not optimistic enough, then I suggest to not invest at all. 5. Don't think that you are smarter than God. With that, I'll see you in the next video, but more importantly, I will finally see you on the moon. Goodbye!